Ho, ho, ho. It's Santa Larry here to provide you with some little known tax planning ideas that could still save you money in 2023. So here's tax planning tip number one. If you've got customers that you're going to invoice in December, although you really don't need the cash in December, consider putting it off until January. That moves that income from December in this year into next year and defers the tax on that for a year. On the flip side, if there are expenses that you would normally pay in January, consider paying them in December to get the deduction in this year as opposed to next year. The same thing would be true if you're planning to buy any capital assets like printers or computers or cars. Consider buying them in this year instead of waiting until next year. You'll be able to get a higher deduction because the bonus depreciation rate is higher this year than it will be next year, 80% bonus depreciation rather than 60% bonus depreciation next year. And you accelerate the deduction from 24 into the current year. Another tax planning tip a lot of folks don't think about relates to charitable contributions. Typically, when we think about making a charitable contribution to our favorite charity, we think in terms of writing a check, which is great. The charity loves checks and it gets you a charitable deduction. On the other hand, you may have some assets like some stock certificates that you bought a long time ago, and they have a significant amount of appreciation in them. If you sold the stock today, you'd have a capital gain tax to pay. However, if you give that stock to the charity, you get a full deduction for the value of the stock today without recognizing the capital gain. So you get a twofer basically by not paying tax on the income and getting a charitable deduction. So if you are in a charitable giving mood this holiday season, this can be a great way for you to get more bang for your buck. Another thing you can consider doing is essentially lumping contributions together in one year by creating a donor advised fund or a DAF. A DAF allows you to put multiple years worth of contributions into a fund and not have them distributed to the charity until you decide in future years that you actually want to distribute them to the charity. But you still got the deduction all in one year, which is terrific. And then finally, consider if you've got capital gains for this year and you've got some stocks that may not have done quite so well, you may want to talk to your broker about harvesting those capital losses to offset against your capital gains. That can reduce your tax liability and get those nasty loser stocks off your books as well. And by the way, while we're in the spirit of giving, if you'd like a copy of my book, The Millionaire Tax Solution, just go to millionairetaxsolution.com and download your free copy. This book gives business owners a path and a plan to legally reduce or eliminate their tax liabilities using sophisticated tax planning strategies that have previously only been available to the ultra wealthy. So have a great holiday season, and I'll see you soon.